Well, not a good start to the May 4th. May the 4th be with you. If you're long, it's going to be a tough day here. Is it the Fed? Is it Jerome Powell? Yeah, a little bit, but more banking problems, regional banking problems. Folks, this is getting serious. We got to talk about it. We got so many earnings. We're going to be here until noon talking about earnings. This is pre-market prep. This is Thursday. Let's get it going, Mitch.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Conan.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Folks, we're down 17 and a quarter handles. I mean, not good, not bad, not super bad, at least not yet. We're still above last week's low, folks. So keep that in mind. 40.6875. That is your level of the day. That's last week's low. The buck taking a hit, down 14 and a half cents, 100.97. Bonds up almost a half a point. That 13.30 seconds at 132 and 930 seconds. Crude down 7 cents at 68.53. What a bad 3 days, but whoa. Up. We got the 63.64. Holy macro. I don't know about that. Gold up 1280, pressing up against the highs of the move at 2,049.60. Silver back up near 26, up 18 cents, 25,685. And Bitcoin having a good day, up $915, 29,335. So we got to bring in Triple D here and Dennis. I know some days are good days. You get off to a good start. Some days you have a bad start, and this happens to be one of those days where you got some work to do, huh?
Yeah, this is one of my worst overnights that I've had this year for sure. And this goes with it. You know, Mitch was giving me a little pep talk. I'd been on a little roll for a few days here. I had a crappy last month. I still made some money. But I hadn't had a day like this where I really got hit hard. And sometimes you just come in and, you know, when you're trading 30, 40 stocks, sometimes news is for you, sometimes against you. Sometimes you get a headline that is random and it's like, oh, you know, like I'm dead. And you know you're dead and you just got to work out of it and there's nothing you can do about it. And you just minimize the damage. That's what you do. Worst thing you do is just hold on and say, well, I hope it comes back one day. Sometimes you just got to minimize the damage and move on. Trying to minimize the damage in some of these things. I have two stocks that have random headlines that are working both against me. So a little bit of bad luck, but you know what? That comes with it.
Yeah, I mean, that many stocks. I mean, you know.
I have news hit every night.
Yeah.
It's just like usually, you know, like random news hits my stocks. Like, you know, you try to avoid earnings, you try to avoid certain things, but there's random headlines that happen overnight sometimes. And sometimes, you know, you're positioned good and sometimes you're not positioned good. And then it's just about minimizing the damage when you're on the wrong side and maximizing the gain when you're on the right side. Today, I'm trying to do a little bit of both. It's going to be a tough day. I'm going to say that.
Two major learning lessons also is I'm sure you don't have all your eggs in that one basket, Dennis.
No,
and so that's what it's all
diversified,
about, right?
But even that.
Diversification, right? That saves you with those random headlines. Because you just don't know, right? And the truth is we don't have control over headlines. Headlines are going to appear sometimes and ruin our trade. That's just what's going to happen sometimes. Even if you had the best technical setup or whatever it was, it's going to happen. It's going to happen. But the truth is how you deal with it that matters, right? Because now the situation, Dennis can't change the situation, but what he can do is control how he acts upon it. Now that
he does it the same way every time. I mean, he minimizes the damage. But so what do you think? What do you think, pumping Powell? I mean, you know, dumping Powell. I mean, you've had, you know, Mitch made a good point that the banks, you know, were selling off late in the day. So I didn't get the memo about PacWest, but we'll go to the banks in a second here. But you know, listen to the Q&A, and I don't want to degrade other report. I don't want to put us up on a pedestal. But I mean, how many times can you ask him when rates are going down? How many different ways can you ask him
Yeah.
when the Fed is going to stop? I mean, he says it every time. It's very
All these
plain.
answers were very scripted from out of, what he has said before. He didn't get caught blindside. He didn't say something he shouldn't say. He, said exactly what he was supposed to say. That conference kind of went exactly as planned. And it was really choppy. I mean, at first, I'm watching, and he says, yeah, we're going to keep fighting inflation till 2%. And the algos sell off on that. I was like, are you kidding? Obviously they're going to keep saying that. And then, he's talking about, while being, not towards the end of the cycle, but, hinting that, and obviously the language, and it kind of acted like that they were done for now. And, and the algos are rallying, and then they're selling, and then they're rallying. And then in the press conference, he's like, well, they feel like they're getting past the banking crisis. And I mean, those comments couldn't have been worse timing on those, because literally after the bow, we get PacWest news, which we can go to now.
Okay.
Which looks like your next bank failure. I mean, how many banks are going to fail here? And now you got, does not PacWest just down, WAL down 17%. You got the First Horizons merger with TD falling apart. That's down 41%. I mean, just an epic disaster in regionals all over the place. KRE breaking down to new lows again here after hours. It's down another, 4% in the pre-market?
Yeah, 4.5%.
I mean, just a disaster in the regionals. But, but rotation keeping us up. Lots of stuff higher today.
Yep. All right, let's talk a little bit about it. Of course, PacWest says that it's exploring all options as its stock tumbles in the wake of First Republic's failure. They also said that it had not experienced out of ordinary deposit flows after, of course, FRC's collapse. But you guys can clearly see that does not look good there for PacWest. We will see what happens if anything comes out of this and expands. Maybe another big bank steps in again. Who knows, right? Will the FDIC need to step in? That's another concern. We'll have to wait and find out. Of course, there's the other news, too, about TD Bank and First Horizon mutually agreeing to terminate their merger agreement. So TD Bank says that it's unable to obtain a timetable for regulatory approvals for the reasons unrelated to First Horizon. And under terminate agreement, TD will pay $200 million to First Horizon. And that's FHN. You guys can see that down big, and TD actually up on this.
It's I mean, you got the memo, Hunt. The price action in this told you things weren't good for the First Horizon. I mean, it was supposed to be done at 24.50, 25, boom. Then the banking contagion hits. You drop to 21, and then it was out there. I mean, in 19, and then you spiked down that day. So no big. I mean, the price action of these mergers and things like that. I mean, I don't have many stocks that get taken over, but a lot of times when you hear that initial rumor or whatever fact, this was actually a deal. Boom, time to ring the register. I don't know that much about First Horizon Bank. I mean, I don't know what to think of any of these banks.
The problem with First Horizon Bank now, small regional. So it was safe when it's getting taken over by TD. Now that it's not getting taken over by TD, I think it's going to fail. And I mean, this goes, it's one thing to not go through on a merger. Like, it's one thing to, okay, well, it's not getting taken over, so it's going to go back down to where it was. No, I think FHN could, be a zero. And the market thinks it too. It's down 40% here, and obviously they were hitting it before here too. So, I mean, this is another problem for the markets. PAC-W is a major problem. WAL is a major problem. FHN looked like it was okay because it's getting taken over by TD, but now that it's not getting taken over, add it to the list. I mean, where does it stop?
I mean, you talked about PNC earlier in the week, and boy, that's getting hit. That's down another $1.85.
We got problems here, man.
Well, why is the? I mean, I don't want to.
Because you know what? The algos are all written. I've talked about this before. That they just like the index is stable and they buy up whatever isn't related to it, blindly buy it. I can see it after hours. You can see the algorithm move, like on that QQQ algo that I always talk about. When when you got like a Meta or an Apple, getting hit really hard, then they buy up the other components. You can see because that goes bid. All like those 22 stocks are non-tech go bid at the exact same second. So it's the same participant doing it. So, I mean, the algos are just written to stabilize the indexes. And they buy up. And I mean, today, okay, Microsoft, it's going to be green. Because you know what? Regional banks are going down. So obviously that's good for Microsoft. I mean, that's where we're at. That's what this market is. It's driven by ETFs. It's driven by the ETF arbitrage. And if you're not respecting that, it's very difficult to trade. And that's what we're at. So they're not driven by fundamentals anymore. It is driven by ETF arbitrage. And that is all that matters. And you know what? That's scary. It's scary that the markets are so dependent on that, because fundamentals in the long run do matter. And I do think a lot of this, just is rotation. And people are like, and the bots are like, well, we know regionals go down, tech goes up. It's the new thing that's been going on for 6 weeks. That continues here. I mean, the QQQ is green, or it was a minute ago. I mean, Apple's down pretty significantly, so that's not helping it, but Microsoft is green. Go through your tech stocks. Microsoft's green, Meta's green, Google's green, Amazon's green, Netflix is green. You got Shopify trading way up here on their earnings report. I mean, they find stocks to buy, and they're like, we don't need the banks. I don't know, man.
Yeah, for now.
It's a little bit interesting to think, the banks, we don't need regional banks. They can all fail, and it's not going to have any repercussions through the economy whatsoever. I mean, maybe if the FDIC bails out everyone, maybe it's true.
You did a pretty good job of explaining the ETF arbitrage, but K-Chat is just asking if you could just expand on it just a little bit more if you're up for it, Dennis.
I mean, we've talked about this stuff before. The cleanest example I can give is, and not with the regionals, what's happening right now, but the QQQ, non-tech components moving opposite to the tech components has happened for years. And when you get certain situations like Microsoft goes up 10% and the Qs aren't up really enough to make up for it, they just sell everything. They sell Pepsi because it's in the Qs. They sell Costco because it's in the Qs. They sell Comcast because it's in the Qs. They sell Honeywell because it's in the Qs. Like, people just think, oh, QQQ is all 100. There's like 24 stocks that are non-tech stocks. I mean, AstraZeneca is in the Qs. REGN, Regeneron is in the Qs. Ross Stores, nothing to do with tech, in the Qs. Walgreens Boots is in the Qs. So people call it natural rotation, but it's the ETF arbitrage that's really the driver of the bus, because it's all got to add up. When we hit 9:30, the numbers have to add up. So what happens after hours, is basically you get a big move. Qs are up, but they're not up enough. The futures aren't making up for it. So then like, okay, we'll just hammer all these stocks and we'll make up for it that way. That's how it adds up. So, I mean, these are, relationships that I trade continuously. They're good money-making relationships. But, at the same time, we've got to just be respective that, does it make any sense that, regional banks are collapsing and that's a buy for tech stocks? Does that really make sense? That's what's happening, though. And that's the ETF arbitrage that really drives that. And then people figure that out. And like me, and I'm like, buy tech stocks because, regional banks are collapsing. That makes no fundamental sense whatsoever. And I just don't know if it unwinds at a certain point in time.
Exactly.
I just don't know if we get ugly enough and we get like 10 regional banks collapsing that people are like in these tech stocks, they're like, oh crap. And the algo's like, oh crap, it's not working now. I'm scared of the unwind from that.
Mm-hmm. And let's get into some of our earnings reports.
I'm just going through those right here. I just brought up the triple Qs here, and you see Microsoft and Apple right there. 25% of the Qs, Amazon. Then you see the heavy tech weighting in the Qs here. Now then you have a Pepsi. Like, what's that doing in the Qs?
So you have 1, T-Mobile, 2. So they add all those up and treat it like, okay, we got to make up for Microsoft. So we'll hit like 15 of these, or there will hit all of these non-Qs, and that's a good 15% of it. So that makes up for it. And then the index is like muted. The action is muted. It's like the algos are just written to mute the trading action. It's crazy.
Okay, Mitch, we'll let you drive the car here. Go ahead. Let's do some earnings.
Let's go to Qualcomm, right? Let's start talking about some earnings that are starting not to look the best, right? Let's get to Qualcomm's EPS here, $2.15 in line. Sales of $9.28 billion beat the $9.1 billion estimate. They do see Q3 adjusted EPS to $1.70, $1.90 on the high end versus a $2.16 estimate. Also, revenues lower than their outlook. They have the high end at $8.9 billion versus a $9.14 billion estimate. Qualcomm's outlook falls short. CEO cites challenging mobile phone market. That might not be good
that's
for
what's
Apple
hitting Apple.
tonight,
That's what's
right?
hitting. Oh,
There you go.
Oh,
yeah.
There you go.
There
Yep,
you go.
ahead.
Challenging
No, it was Qualcomm
mobile
all the
phone
way.
market.
Apple's down $4 on the Qualcomm at one time.
CEO said that will boost chips performance in the coming months to run larger AI models on the smartphones. Of course, trading lower, and it issued weak Q3 guidance.
But you know what here? Now what have you done? You've lowered the bar for Apple. What that just did was naturally the algos want to buy Apple because one, it's got the momentum. Two, it's opposite the regional banks. Hell, they're talking about Apple as a bank. They got, you make deposits, Apple Bank. I mean, so naturally
everything's a bank nowadays.
Naturally, they want to buy Apple. So now you just lowered the bar for Apple. It's going to go down $3 here today on Qualcomm, and people are going to be like, oh, maybe Apple's not going to be that good. The bar just got lowered. So if Apple says anything okay, it probably rips on earnings tonight.
I don't know what to say about this Qualcomm here. We're just sitting at the lows of the session, and no one's stepping out to make a bid here at all. I'll give you one number on the downside. We're going all the way back to the November low here. We eclipsed the 2023 low. That was around 107. So this is one stinking low here. 101.93, but I just would be careful on this one. And I know these stocks are totally unrelated. But what was that beauty stock? Was it Estee Slaughter?
Slaughter. It just kept going down.
Yeah, but
there's so many disasters. I mean, this is just the phenomenon of being so heavily weighted. The S&P just not a good indicator of what's happening overall. The IWM, much better indicator. Go to any index that has more than 30% in 3 stocks or 7 stocks. I mean, it's just doesn't feel like the market doesn't feel like that. It doesn't feel like we're near the highs for the year. You have so many little individual disasters. The regional banks, forget about that. That's just an epic disaster.
So,
but even like Estee Lauder, and we talked about what was the one the other day, the solar stocks. I mean, they've all been hit now too. Look at the tan. I mean, it's sitting right at the lows here too. This is what Gil Morales was talking about. Gil, shout out to you. It's been a long time since we've been on the show. But I mean, he's looking through all these charts, and that's what he does, look through charts, and he's like, what bull market do you see? Like all you see are individual stocks breaking down all over the place. And you have Microsoft and Nvidia and Apple making new highs, and it makes everything look better. But I mean, individual stocks look very, very bad. Like there's so many that look bad. You can find some that look good, but there's just so many that look bad. So maybe you just got to buy the S&P, because if these individual stocks start turning around, maybe we just rip higher here too. So I don't know anymore. Like I you can't just look at the S&P. It's just it's gone to a point where it's just a poor indicator for the it's a poor it's just too heavily on those 7-10 stocks. So it just doesn't represent the market as well as it used to.
What about the diamonds? Look at the diamonds. Look at
the diamonds is even worse, Joel. It's 30 stocks, and it's price weighted. So Apple's even more in that.
Yep.
Microsoft is even more in that. They're heavily weighted. Like, I mean, go to the diamonds for fun. Do the exercise. Look how much Microsoft and Apple are in the diamonds too. I mean, that's always been a poorly constructed index. So, when you look here, at other, at the IWM, which is, a lot of different stocks in there. I mean, it's a hell of a lot different. So UNH is the top thing, but Microsoft is 6% of the Dow. Goldman Sachs is 6%. UNH, which has held up very well, defensive, is 10%. So UNH is doing its own, because UNH is defensive and holds up well in bear markets. So just, I don't know. But then, again, we have all these stocks breaking down. The indices won't want to go down, so they won't go down when everything's breaking down, all these little stocks. Maybe they're just not going to go down at all. The only thing that's going to take them down is basically the SPY is just an Apple index. It's an Apple, Microsoft, and a big tech index now. It's really what it is.
We'll have to wait and find out. Let's keep moving. We got a lot of earnings reports to get through. Let's go to Moderna here as they reported their earnings here. Let's go Q1 EPS at 19 cents, down from 8.5. year over year. Sales at 1.83 billion beat the 1.18 billion estimate. They did say their negotiations for new orders of fall 23 in US, Japan, and EU, in addition to reiterating 23 minimal sales expectation from 5 billion from previously announced COVID-19 vaccines. These are advanced purchase agreements. Moderna did post Q1 23 beat amid stronger than expected vaccine demand.
Well, you're getting a little pop. You're up 226. I think that's the good news. I think if you're trading this technically, you can have you have a couple good setups. You're opening into yesterday's high, which is important. You take that out, 132.88, and then the pre-market high right there at 35. 135 splits the highs from the last two sessions. So technically on the upside. On the downside here, I don't know what they saw in the report, and they whacked it through 130. But I'm just looking at this 130. If the market turns around, you find big sellers in here. Under 130, I think you just got to head for the hills in this one. I don't. Pre-market low is way down at 126.50, but trading okay with the technicals up. Well, it's down just a little bit farther from yesterday's high. Up $1.90, 132.04.
All right, let's keep it moving. Let's go to Solar Edge as they reported their earnings, and they're up pretty significantly here in the pre-market. Q1 adjusted EPS $2.90 beat the $1.94 estimate. Sales of $943.89 million beat the $932.7 million estimate. They do see Q2 revenue from $970 million to $1.01 billion versus $986.37 million estimate. So good Q2 revenue outlook and a beat and a beat.
It's ENPH set the bar really low here too. I mean, they hammered ENPH on it. They hit SEDG on the ENPH. SEDG was $300, well, over $300. Look at the gap down. It was $317, $308 when ENPH reported 2 weeks ago. And ENPH gap down, and then they hammered this. So they knocked $50 off SEDG, and they didn't even say anything. So now they get the report, and they're like, it's not that bad. So they're getting some of that back. With that being said, everybody's underwater here, and I don't know, like you're coming back up to some resistance areas here. So I'm not buying anything up $28.
All right, so the gap down day, nice technical setup here too, because on the gap down day, you had a high at 93.99. The next day, they tried to, I'm going to get it into the gap at 94.23, and you peaked right around that area. So, if you bought the dip here, you're back into the top of the gap area. Very important for this to get a sustained 295 bid, and got a gap up to like 308 and change. But right now, opening into resistance, up almost 11%. People that bought the dip ahead of earnings, I don't know. I'd be ringing the register here at 295. We'll see what happens with SEDG. I noticed ENPH did get a green candle yesterday. Rah. That's trading up 3 1/4. So maybe that will be a little bit on the recovery road. I know I've said this 100 times, but I believe it will be 2 weeks ago tomorrow. The old Citigroup downgrade of First Solar to a sell. That might be one of the best calls here, and that's when you saw the price action here.
Never,
First Solar.
yeah, it's been straight down.
Never recovered. Yep.
No. Yeah.
Yep.
All right, let's go moving over, and this one might be one that Warren got wrong. Let's talk about Paramount Global as their Q1 adjusted EPS at 9 cents, missing the 17-cent estimate. Sales of $7.26 billion, missed the $7.42 billion estimate. Paramount reported total global viewing hours across Paramount Plus and Pluto TV increased over 50% year over year, 20% just in the last quarter. And one thing to note, though, is that this is all really kind of the positive is coming from Pluto TV. Of course, Pluto TV is a free ad-supported streaming service that anybody can just download and go ahead and get. It's a lot of old movies on there. This shows me one or two things. This shows me, one, that the consumer is maybe going towards free added supported streaming services because they don't want to pay for Paramount Plus. Or it could be that they're just trying to, the inflation's getting high and people are tuning in to Pluto TV since it's free.
No one's jumping out here. Over 1 million shares have traded, down 376, right at the lows of the pre-market session. I'm looking at the dailies here, and I do see 3 lows kind of
Lots of
flanking the
support.
$19 area. But I mean, it's not bouncing under night. You're in a really thin area here. If you don't manage to hold 19. I'd look in the lower 18 handle. January 6 low, 1828. Previous low, 1792. But no, I mean, look at this thing. Step down seller here at 19. So I don't know. I mean, if 19 was your target to cover short, well, there it is for you. Let's see what happens when I can't say liquidity because it's already traded 1 million shares. That's a lot. It's a lot of shares in the pre-market for Paramount Global.
Yeah, I got the pair on PARA versus PARAA, which I'll take off after the bell. But after the opening bell, it's getting PARAs. They got some support in here though, Joel. 1889 is
Yeah,
low.
yeah,
I might be
I just
telling
don't
you
like the story.
I'm selling it. I'm not selling. I'm saying if you're looking to buy at multiple, what's it paired with?
No, I just have it on the PARAA. That's the class share class arbitrage right there.
Okay.
So those move directly together. So I often have that on. I pair trade a lot of them. It's like that's just your relationship, like pure relationship, like 99.8% correlated. So there's not a lot of thinking on that one.
Okay.
All right, let's go ahead. Let's get to a little bit of a coverage of our 8:30 numbers that are about to come out because, of course, we have like 30 earnings reports, but we also got 8:30 numbers.
What's the number?
Initial jobless claims expected to come in here at 240,000 estimate. The prior one was 230,000. And then we're also getting continuous jobless claims coming in here, 1.865 million. Prior was 1.858. So it's actually expected to go up a significant amount. We'll kind of see what happens here if we can actually see initial jobless claims going higher. All right, so if you need to go wide, you can go wide, Dennis. I don't know if it's going to shake too much.
I don't know if I can do any more damage to my day here.
Dennis is like, I need more.
Wide. This will be the day you really get picked off, so I definitely should go wide.
Yeah, go wide, my friend. We'll keep an eye on the price action here. We're keeping a look to see when these numbers come out, but it's just about to hit in about 2 minutes. Didn't want to get another headline in and then all of a sudden miss the numbers coming in, especially on a day where I'm starting to really see that I think this tech trade is going to turn around. And I even started getting a little bit more rah bullish, but that was when the regional bank concern was going away. Now that this is coming back, I'm really thinking that we're going to start seeing a turnaround in tech. AMD telling me a lot yesterday. They didn't want to buy that back at all. Still lower actually now than kind of yesterday's price action. Really, we're close. I mean, the pre-market, you kind of went towards those lows. We'll look to see if AMD keeps going lower. One stock that I definitely will keep watch on is, of course, the strength of NVIDIA. When will that turn around? Because it's been an absolute monster. I shorted it yesterday in the day trade action, was able to make some money right out the gates. It was dropping fast, but then, of course, came back, stopped me out, break even on the rest. Was able to take first profits, but I'll be looking to see what happens on the technology trade if we get a turnaround. Let's see what we get here.
We made fun of all those analysts that were raising the price targets, Dennis, and you know what? They got their way. At 8:35, we're going to have David Trainer come on. He's going to be talking about earnings, and one of his things, let's talk NVIDIA and the ridiculous price target increases. So we'll get his opinion on that. We're going to the S&Ps here. We're down 14 handles, which to me does it for what's going on. Doesn't seem too bad. We're getting a little choppy action. Pre-market
really
low
good for what's going on.
Yeah. 40.75. I mean, if you're short big time this market, I mean, we did hit 41.67 yesterday, so we did lose 70, 80 handles. But here we are. We're down under 4,100. I say mid-range on the session. I didn't calculate that. That's what I would be looking at for any kind of pop. What do you got for me, Mitch?
Initial jobless claims coming in 242,000 versus 240,000. Definitely coming in a little bit hotter, showing that initial jobless claims are climbing. And then now continuous jobless claims coming in at 1.805 million versus 1.865 million expected. So a little bit under there on the continuous jobless claims. And of course, on the continuous jobless claims before, it was at 1.858. So it looks like actually on the continuous jobless claims, we actually came down on that number. And so that's a little bit of a mixed signal there.
Yeah, it's a jobs number coming out tomorrow. Be the big determinant. We're not getting a lot of price action here. A little bit of a sneaky rally.
Yeah, a little bit.
Yeah, a little bit bid here. I'm looking at not much down here. 96.75. That's mid range on the session. We'll keep an eye on. But if the bulls are going to make a stand today, they're going to have to get this back in the 4,100 handle and get over 4,105. The reason I'm saying that was 4105.50 was your low on Wednesday, 40 or Tuesday, and then yesterday's low was right there, a couple ticks from that area, and you bounce. So there's where we're looking at if they want to try and get this green today. And anything can happen in this market, but right now a very tepid rally. 8:32. We got 3 minutes before we bring our guest on. Let's go to a good earnings. We kind of been Debbie Downers here. Let's go to shop till you drop.
The one that I will still be kicking myself for not grabbing at that 40 spot. We talked about the 40 spot, and we got multiple chances to get it. So it's shame on us, not shame on you guys out there. Hope somebody grabbed it. Let's talk about Shopify's earnings here, as they reported Q1 adjusted EPS at 1 cent, beat the loss of 4 cent estimate. Sales of 1.51 billion, beat the 1.43 billion estimate. They did agree to sell Shopify Logistics to Flexport. As you guys know, Shopify has been working with Flexport. They're kind of doing a partnership, trying to compete with the bigger boys, right? Amazon, Walmart, those kind of names. Shopify's president did say, though, that we're going to make a deal for buy with Prime with Amazon if it's in the best interest of merchants. So that was said by the Shopify's president.
Big pop here. I mean, you're trading up $8 on this thing. And you guys are talking about that $40 area. Looking at the upper right chart, right? You got the pop off the last earnings. Then you came all the way down to fill the gap at the end of March. And then even if you had that bolt of 40 to 45, it came back down to 40 again. But you know what? With it trading up 7 to 88, we can't really talk about that $40 level. We don't know when that will come into play. Trading at the highs of the pre-market session. And man, this is technical Thursday here, opening right into the February highs, right? 54.49, 54.67. If you're looking for more on the upside, there's not much. That's the monthly number too. So let's see if we can take it to 54.5 and keep on going. I would just be a little careful on this one. If you went 54.5, 55, 55.5, 56, let's say theoretically, and then you came back down through that area, I wouldn't want to hold on to it. But that's a technical setup in Canada's major technology company.
All right, we'll see what happens there in Shopify. Let's go ahead. I'm going to pull that down. We'll get to our guest time. You guys smash the like out there. Let's go ahead and get right to it.
Mr. Trainer, CEO of New Constructs, earnings season, my earnings season favorite guest. How you doing today?
I'm doing great. How are you guys doing?
Okay, so I have a pretty good memory, right? And I don't forget things. And I wish I would have left it on my chart. But I remember you talking about Toll Brothers maybe 3 months, 6 months ago. And you said that they were basically priced to go out of business. And you were very bullish that stock. The housing stocks have continued. And here we are. So I just want to talk about the housing stocks now, because they've had, where we at? I know we're going to go to earnings with you, but look at these housing stocks. Are they telling you we're going into a recession?
Well, they were telling us they were going into a recession before. And so what we like to focus on is the expectations baked into the stock price. So at the time, back when we talked about it, the expectations were too low. Expectations appear low as well at this point in time. So I would say Toll Brothers still looks cheap, but you're looking at some really high earnings that we're kind of basing that off of. And so, taking a look at our rating right now, it gets an attractive rating. It's priced as if its current profits are going to decline by 40%. That's a pretty steep haircut, but going into what we believe to be a slowing environment, that might be a pretty fair number, considering that we're looking at pretty close to peak net operating profit after tax these days. So I wouldn't be as bullish today as I was on it when we talked last time.
Okay, price to perfection. All right, a great stock that we got to start out with here is NVIDIA, and your exact quote here in your email to me was, "Let's talk the NVIDIA and the ridiculous price target increases." Well, we made fun of the analysts too, but here it is at 277.28. Where are you at on NVIDIA?
Yeah, this was this was one of our early sort of best picks for long ideas going back, I don't know, several years ago. And then we closed the position after, I don't know, several 100% return because it just got too expensive. And then, of course, what did it do? It just kept going up, right? No good deed goes unpunished. And so I had another partner ask us for sort of an update on what we thought about NVIDIA. And so we ran it through our reverse DCF analysis, where we tease out the future margins, returns on capital, cash flows, all the future performance metrics required to justify a given price. And what we found with NVIDIA is that we not only did we have to project the best ever margins for the company going forward, we had to do about 20% better than that. So specifically, we're showing the best ever after-tax profit margin for NVIDIA being about 38%, right? And in order for our model to generate future values, right, to generate implied stock prices that are equal to the current stock price, right, just to get to what the price is today, we've got to put in margins at 45%, all right, into perpetuity, right? So they got to get to 45. But the real kicker is that at the same time, they've got to grow revenues at something like 20% compounded annually for almost 20 years.
Wow. That's definitely going to be something to definitely keep an eye out. I'm sure everyone's been watching NVIDIA. Everyone's been watching mega cap tech, right? Of course, one stock we have that could change things around tonight, Apple. What about it, right? Is this a good stock at these levels?
Apple is a great example. Good company, expensive stock. It's not as much as NVIDIA, right? We do have to put in best ever margins for Apple, but the revenue growth rate at this level is more like mid-single digits. So it's expensive. Apple's very expensive, but not like what you see with NVIDIA. I mean, with NVIDIA, you kind of got crazy town, right? It's 19% compounded annual revenue growth for 16 years and best ever margins and returns on capital over that same time frame, just to justify $278. With Apple, we've got a much sort of the bet. You got to keep the margins at the current levels, and you got to grow revenue at high single digits for the next 13 years to justify the current stock price. So Apple, we think, is priced for perfection. NVIDIA is priced for like ridiculousness.
David, the only problem is that these arguments have been made here for months here now, and these stocks continue to climb. What turns the narrative? What is it that actually knocks NVIDIA down? What is it? Is it earnings? Like, is it a disappointing earnings report? What is it that turns the narrative? Because I've been saying the same thing. 60 times earnings on NVIDIA, and it goes to 65 times earnings. I mean, I don't get it either. But what turns that narrative?
Yeah, Dennis, I get this question all the time. I mean, look, we had Carvana on our zombie stock list, almost a year ago, right? And several other stocks. And before that, they were in our danger zone. And so, everyone knew terrible business, Sweet Green, Peloton, we got like 32 stocks on the zombie stock list. And we have, and they were all in the danger zone, most of them before that. And we were right. We were early. And so I get that question a lot, and there's not an easy answer, right? I mean, if I had the answer to that question, we'd be doing this on my yacht, right? So timing. Right, yeah, it's tough, and I think my answer is it's going to take some time, but I think it's inevitable, and I think the Fed chair gets it, and I think what's different this time with respect to raising rates and getting inflation under control is that we've got someone who wants to do it gradually, because he recognizes that if he just jacks up rates and crushes the economy and crushes all these stocks back to where they ought to be, the buy the dip crowd's going to push it right back. And we're not going to be done with inflation. It'll be a temporary and brief respite, but we'll be right back where we were a few months before. So I'm calling it the sleeper hold. It's a slow choke, right? And I think these stocks are starting to fall. We've seen a lot of the overpriced stocks, fall precipitously. And we're going to be kind of going down the list. The lowest quality guys are going first, and the highest quality folks will go latest. But, you got with Apple and NVIDIA, you got some really high quality companies, tons of great cash flows, right? Now, higher on the list of stocks are going to go down are the bad businesses and expensive valuation. That's going first because it's the most obvious, and they're the first to be hit by the liquidity issues that the banks and the Fed, are going to be drawing out, right? I mean, who wants to loan Carvana or Sweetgreen or, for that matter, Bed Bath & Beyond? Who wants to loan them more money?
Yeah. Well,
and they
nobody,
need it because they're burning cash.
Yeah. It's actually a frustrating market to be using fundamentals in though still. And we get to these points where fundamental investors, okay, well, this is a fundy market. It's being driven by fundamentals. But, in this market, we've seen instances where Crocs reports a beat raise and they murder it. And then, you've seen other stocks like they miss and they buy it back. Like Micron was an example of just from the last month there. So tricky.
Yeah. Go ahead.
I think fundamentals are mattering more. I think the big difference is you got to have good fundamentals, right? There are a lot of cheap, easy, low quality fundamental analysis out there. And that has sort of taken the mantle as fundamentals for a while. It hasn't worked for a long time. I don't think it's going to work in the future. I think the real fundamentals are people that are doing their real homework and looking at footnotes and things like that, because without the footnotes, you don't have a true picture of the fundamentals.
Now, one stock, of course, that also has been trying to make its way back. I know that a lot of people keep an eye on it. It drove the market for a long time. What about Tesla? Is that too high here? Are we going to see the turnaround in Tesla? Because, overall, I was looking at Ford's report yesterday. That seemed well, but you guys see the price action there on Ford and GM. They don't look too the best. What do you think about the vehicles in this area, David?
We're long the legacy and short the new entrants. The valuation disconnects between the businesses are extreme and remain extreme. Tesla still prices if it's going to have 80% market share of the electric vehicle market by 2030, which would imply growth in production well beyond what they have the means to produce. So they're nowhere close being able to meet those expectations. And I don't believe that Tesla is also going to be all of these other great businesses. Look, we've been waiting for solar panels and batteries for a long time, and all they do is fall behind their competition. Same is true with, I'm not even going to call it full self-driving because it's not, but if you look at the rankings and who's doing better in autopilot type of technology, GM and Ford are crushing. So is Volkswagen, so is BMW, so is Mercedes. Tesla's way down the list on that. So, and that's another one, Dennis, right? Like fundamentals have been telling us this thing has been crazy overpriced for a long time.
Yeah.
I think it's going to take a while for all of the crazy to be squeezed out of the market. It's going to be a slow squeeze. But the good news is that the slow squeeze means it's going to take longer for it to come back. Because we crush it all at once, and then they're going to say buy the dip and it's going to be right back like it was.
There's just no fear. Like David, there's just no fear though. Like the only fear out there is still the fear of missing out. If you would have told me 2 months ago that we would have 4 regional banks collapse and have another dozen that look like they're gonna collapse, and the S&Ps would be making new highs, I'd say, how does that add up? But it's what's happened. There's such a disconnect even between certain stocks. Like PACW down 40% and bouncing a little bit here now, but just so many regional banks, the KRE making new lows every day, yet the S&P just doesn't care. Can we really rally, and keep going up with all the regional banks collapsing? Is that math? Does that add up?
No, it doesn't add up. And I think the difference today is that you go back a year or so and everything was going up, right? And there really was no fear. There's a little bit of fear now, for sure. in the financial sector and in the ridiculous tech sector like Sweet Green, Peloton, Beyond Meat. We don't talk about those guys so much, right? Because they got crushed, right? And so it's coming.
Over.
It's coming. It's like gangrene, right? It's going to be slow and steady, but that's what's needed to change long-term behavior, I believe, right? Otherwise, we're just back to buy the dip, and it just starts all over again.
All right, David, you got something you like out there, so let's finish up this very informative segment with something that's on your buy radar.
Oh, we like a lot of energy stocks, but most recently, I think what you're talking about, Joel, is we came out with a reiteration of our buy recommendation on HCA. We're seeing what we call same-store sales are super strong for them. That's just same facility admissions, and it's still relatively cheap. This has been a very successful long idea, but we still think it has a lot of legs. And look, in a world where, as I said, the gangrene is coming for the overly expensive stocks, this is a business that's really thriving. Cash flow circulation is extremely strong. There's no danger of gangrene here. It's in a great business in terms of healthcare. We know how defensive that is. And, the scale that these guys have give them margin and return on invested capital and profitability advantages that are unmatched. And we all know, cuts in Medicaid, Medicare, they're coming, but for the one hospital that's going to be hurt the least is this one. And we see a significant amount of upside if they can maintain growth at anywhere close to near historical levels. Right now, it's priced to grow about half as profitably or half as fast as it has in the past. And we think if it does even slightly better than that, we're looking at another 20, 30, 40% upside.
All right, there's a stock that's been holding up pretty well, not too far from its all-time high. So buying some strength. David Trainer of New Constructs. It's an investment research, digging deep down into the earnings. David, always love having you on during this time of the year, and we'll be dialing you up to next quarter. Take a look at the numbers. Thanks a lot, David. Really appreciate it.
Thanks, you.
David.
All right, we're trying to get above mid-range in the session, but there's just too much fear out there. 90, to mention 96.75, and the bulls are just they're not out there yet. We'll see if we can get it back.
I completely disagree.
You disagree? Okay, what do you
say?
Bulls
are everywhere. I mean, they're buying Shopify and Meta and Microsoft and Google and Amazon, and they're buying oil stocks here now. They're buying all your consumer staples like they always do. The bulls are out here. I mean, we got PACW teetering on another bank collapse, and its S&P's down 10 points. So they don't care. They're going to probably take a green because they just don't care. They don't think they need any of these regional banks. The market thinks they don't need them. Maybe they're right. Maybe Bitcoin solves it, or maybe Apple Bank solves it all, and we don't need any of these regionals. Just let them all go away, and that's what the market's saying. The market is literally saying, not me saying, the market is saying, KRE, we don't need you. We don't need you whatsoever. And, who are you to argue? I mean, S&Ps have held up. KRE is straight down since March, and SPY has basically been straight up since March. So I'm, at a loss here. Logic is not working this market.
We'll see what happens there. Let's go ahead. Let's kick it to our TradeZero time. All right, we still got plenty of earnings reports and things to look at, but I'll also take a look at the gapper. One thing that clearly stands out to me is MSTR up today. So that's probably Bitcoin up decently. I don't know if Joel can take a look at that to kind of confirm for us. Bitcoin was up, right?
Yeah, this is the easiest trade that's there.
Easiest trade,
Bitcoin's
right?
Obvious.
Yeah.
I mean, when you're seeing regionals, getting killed last night, Bitcoin buy is the buy. I mean, so it's up again here, and all those Bitcoin stocks are the buy. That's the obvious trade. Captain Obvious here. As more regional banks collapse, it's only good news for Bitcoin. This is why Bitcoin was created. It was created because of the unstable financial system and the printing of money. Well, what are they going to do? They're going to print their way out of all this too. I mean, the FDIC is going to have to insure all these banks that are going to go under. That's the taxpayer dollars. How are they going to do that? They're going to just print more money. Government's going to come in and just keep printing. So what? As much as I've not liked Bitcoin, this is the environment for Bitcoin, and I'm bullish Bitcoin here as long as regional banks keep collapsing.
All right, we'll see what happens there. I do see another one here that is interesting to call out. Right here, RCL. When they reported their earnings today, they're up significantly here in the pre-market. Let's take a look at that. Nice little push there. You guys can see it. They came in with their earnings here at a loss of 23 cents, beat the loss of 70-cent estimate. Sales of 2.88 billion, beat the 2.82 billion estimate. And yes, Royal Caribbean, you can thank me for that earnings there. I tried to help out. Tried to put some in there for you.
And you gave us good information coming back from that cruise and telling us how busy it was, like right there, boom. And it's in the earnings. There's certain things that are just happening. The problem is like UAL has good earnings and it pops up and then it gives it back. So I'm like, I don't know, like if it's sustainable, if the move is sustainable. I'm with you. Like, I mean, you're looking out there and stuff is still busy. There's still stuff going on. It doesn't feel like we're slowing yet. So, I mean, RCL was kind of that was never a no-brainer, but it ran up into the report maybe a little bit too much from 60 to 67 and now to 72. So it's probably at 75. It's probably more of the profit-taking area here, but it was it was a little bit obvious that this was going to beat. And right now expectations are so low for everything. Any company that beats, it goes up. I mean, talk about Budweiser. I mean, we know Budweiser has got some problems with the Bud Light, but that really wasn't in this earnings report because most of that stuff happened at the tail end of it. So Budweiser comments are fine. Budweiser goes up because they beat earnings. I don't know if that's going to be like next quarter because I don't think anybody's buying Bud Light as much as they are because the sales are down 21%. But, they got a lot of other beers in there too. Maybe they're going to fix those problems in the short term. But, I mean, people just coming here, buy Bud. I mean, okay.
This RCL that got a shot in the arm a couple days ago when there was an upgrade. Can't remember who the analyst was on NCLH. That pushed it through the $65 area. You can see that was at the end of last week, and then things were open up between 65 and 70. Now you cleared 70. Dennis gave you that $75 area. I will just give you one daily high above that. That's if you're looking for potential targets on the upside, 73.51 and 75.17 on the upside. This is probably helping CCL, Carnival Cruise, trying to head up towards the $10 area. So there's your sympathy play, and I think another NCLH is probably still going too, huh? Big level NCLH, folks. We got a 4-star here at 1463, 1464, and 1466. Triple top. S&P's good call there, Dennis. Trying to poke their head into the
Why not?
Under. Why not? Buy the dip, right?
They've written off the banks. They've written off KRE. They wrote off FRC. They're writing off PACW after hours. They're writing off FHN. They don't care. The market.
I think it's just a matter of time. I think it's just a matter of time. We keep saying
that though, Mitch, and it just doesn't happen.
I know, but
buying tech stocks. So they don't care. Maybe they care if Apple misses, but you know what? The bar just got lowered by Qualcomm, so Apple's probably going to beat. It's going to gap up, and then the S&Ps will be back up here at the highs, and we'll be like, what's up? So I have no idea anymore. It's just a very difficult market to call. Very difficult.
We'll see what happens. I mean, a lot of me, I'm just going to be watching also the bigger banks, but because if the bigger banks start really coming down, that's going to be a little bit different. Regional banks is something, whole nother ball game. If you start seeing Bank of America go down to 20, I've talked about it already. I'm just going to keep watching that.
I'm with you, and I'm not going in here and just buying all these stocks, but the timing, is just from a trading perspective here, I'm actually just in shock that the S&P can go up when we're going to lose all these other banks here. And you can see the writing's on the wall. I mean, this isn't like, I'm making a call here. The PACW is probably going under. The market is making that call. I'm just looking at the price action. It's fairly obviously on FRC. There's, WAL. I mean, there's a half dozen other banks that look just as crappy. So they all look like they're going to go bang, 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 bang. That's what the market, and the market just does not care. It does not care that the KRE continues to go down. We're bouncing a little bit here, overall, which is obviously helping the stocks here because some of these banks are bouncing right now. But, does that mean they're out of trouble? No. But again, I don't know what makes SPY start to care about the regionals when there's such a small component and they're comfortable that, a lot of these big tech stocks have a lot of cash. So I don't know. You can tell I'm frustrated today, very frustrated. It's not really, I'm having a bad trading day, but it's more just the lack of logic in this market is just mind-boggling. I've traded and made my career not looking at charts, looking more at logic and trying to get ahead of, where the trades, coming from. And it's frustrating because this market is just completely ignoring so many tells. And this was the same way in 2007. And I'm not saying we're going to the financial crisis, but I was frustrated with that market here too, because you could tell what's going on. Think about the big short guys, how frustrated they were, when they were seeing, these mortgages, seeing, and the market not responding. And obviously, they're the private market, so they weren't even like pricing stuff what they should be pricing it at. But I mean, there is certain times where eventually logic wins, but that's not this market right now. You can't trade this market logically, not right now.
I think it's just a matter of time, but that's just the way Dennis feels. That's the way I feel.
No, I'm with you, Mitch. I am totally with you that I think it's a matter of time too. Because if I thought that, it was, that this is really, that throughout logic, we're just going to buy stocks blindly, I would get off 60% cash and I would just buy all stocks. I would go 100% all in. But I'm not doing that because I'm with you here. But as a trader, my job, I make majority of my money trading. That's my income. So, as a trader, I've got to try to ignore this bias, that I have, that I think the markets need to go down a lot lower and just trade what is in front of me. And, and that's why I probably struggled in March. You've got to, as a trader, you got to just clear your mind and trade what's in front of you. And what right now, the trade is when regional banks are going down, you buy tech. And you just got to blindly do that. Don't think about it logically because it makes zero sense logically. You just have to think about what the algos are doing. That's what they're doing. So until that trade breaks, and it's going to take a big report to break it, it's going to take like an Apple, and we're through most of them. If Apple beats tonight, Apple beats tonight and goes up, there's no more for another 90 days. There's no more concerns from Microsoft or anyone for that long. So I mean, you can't just stay here, bearish, on your trading and then be losing money on this because the market is just not coming in. Now, again, as a long-term investor, I'm staying with cash because none of this makes sense. David Traynor makes sense to me. I think logic prevails in the long run here, which is why I'm not fully invested. But as a trader, I think you got to just be buying tech on dips because this is what continues to work.
All right, let's take a look at Regeneron as they reported their earnings here. Also, it was a beat and a beat. So interesting to see this getting hit here. Regeneron adjusted EPS $10.09, beating the $9.60 estimate. Sales of $3.16 billion beat the $3.0 billion estimate. So I'm not sure where in this report it did not look good, but definitely a little pullback here, down to 770s. It did have like this. Was this real? Was this a real print there to 726?
Well, it's real. I mean, a couple hundred shares traded. I don't
see it.
Yeah, that's why I was taking a look at it.
I got it on my platform. But the other thing, I did, boom, I look at this chart and I say, wow, we're down 33, but you know what? I don't know if this was drug. It must have been some kind of drug news, but you had a double top at 765, then you gapped up to a new all-time high. So opening right into that area, I don't know about that 726 print, but my focus would be the candles, the two candles from March 21st and March 22nd. You almost had matching range days on the highs at 765 and matching range lows on the downside 751. We'll see what happens in REGN.
All right, let's keep going. We'll see some other ones here that are starting to show up. Of course, we've talked about Para. We talked about how Apple's been leaking, but that's starting to make its way back, right? I mean, let me just take a quick little peek. Yeah, you can see it's starting to make its way back. We'll see what happens there on Apple.
They can't stop buying the dip match on them. There's just so many people who are like, where can I go? And I got to think like a money manager here too. And I
mean, the FOMO came, right? The FOMO came like a week or two ago, right? When we started seeing that rip.
Yeah, for sure. And if you're a money manager and you've got to buy stocks, well, you're not buying regional banks. You're not buying, these high debt companies here right now, which they've been hitting. You're going to buy the near debt-free companies, which is mega cap tech. So it kind of does make sense. It's just the valuations. I wish these things were all trading like 20 times earnings because it would be a different story. It's just like they've driven them to such valuations that I just can't stomach them up here.
It's just hard. It's a hard market. It isn't a market that's just easy. I'm taking shots on different areas. I went short like Goldman Sachs. Just looking to see this start coming down. And just keep watch on the bigger bank. Let's just be honest. That's what everyone's going to be watching too. And we'll see if tech can bounce back. Do they buy Qualcomm's report back? I mean, that's still leaking down towards the lows. We'll see. AMD, will this be one to buy the dip on, right? I mean, it was sideways yesterday, kind of sleepy. Is this the kind of stock that you would expect maybe to buy the dippers to come in on, Dennis? As it's kind
maybe,
of
but it's not
there?
a big part of the index. So what you're really seeing, and kind of, as a light going on for me too, is they're not always just buying. Shopify's got earnings report, but they're buying the big things in that index that don't have a lot of debt. That's what they're gravitating to. I mean, AMD is not a big part of the S&P. Nvidia is a much bigger part of the S&P. So I mean, you've got to consider, and maybe we look at those percentages. The index action here. I think we just don't give the ETF and the index ARBs enough credit for how much they really are the driver of price. It used to be like we always said institutions, Joel, years ago drive price. It's indexers that drive price now. That's really what it is. There's so many people and so many money managers just indexing, and so many money managers that gotta own these stocks, and they pull back a little bit, they gotta own them. They don't have to own PACW, but they've got to own Apple, because you know what? The money manager you're going against owns Apple.
So
you
Microsoft,
don't really have a choice.
Yep.
Yeah, and that's really what we're not giving enough, real credit to, is that we're driven so much by the indexers now that it's hard to trade on fundamentals most of the time.
All right, I'm going to hop here. We did try and get over 4,100 there, kind of hit that a little bit of a lockdown. Pre-market low is down at 75.5, and I'll just give you a zone. Last week's low was at 68.75, so that's some targets on the upside and downside. Triple D, great job today. I know you had a lot on your plate, so I'm gonna bolt, and I'll check in with you guys later on.
I'm going to go here too, because I got a crazy trading day ahead of me.
Yeah,
trying
go
to
do
dig
what
out
you
of the
got to
hole.
do, Dennis.
But, everyone chat. I enjoy you. Love you. Haters, love you too. You guys make it.
That's what it's all about.
It's all about, just different ideas and different opinions, and understanding the different opinions out there. So, I mean, we've got to be respectful to all that. And I mean, if you're just in your own brain and just with your own opinion all the time and not opening up to, different ideas, that's not the way you learn. You have to learn. And I learned so much from the chat. So thank you guys. And thanks everyone so much. See you, Mitch.
All right. Have a good one. Take care, my man, Dennis. We'll see you a little bit later. Let's go ahead. We're going to start wrapping up. We'll bring you guys over to live trading action. Of course, we've been coming after it. We got a small account, been taking some swings. I got some swings, and I also saw that Lloyd Ryan opened up an SQQQ position. So come on over, guys. Come find out what's going on with different positions. We also got an all access at the end of live trading. So if you want to find out more about some stocks, and of course, check out our live trading action. Come over and check out what we do. That's coming up next. You don't got to go anywhere. You can stay right here. This will redirect you right over. And of course, we're going to continue with the book club this Sunday. Hopefully I'm feeling better, because I'm still not feeling the best. I don't know if you guys can hear it, but trying to do my best to stick around with you guys, battle in this market, and we'll see what happens. You guys smash the like if you guys enjoyed today's show. And like always, these are for kind of educational purposes only, right? I think that sometimes you guys, we're not here to give you the answers. We're here to give you guys a perspective. You guys hear from Dennis. And yeah, he might have sounded a little frustrated today, but one thing that's important, right? Thinking about what he's thinking about so that we can learn from that, right? Sometimes the market acts logically. Sometimes it's out of logic, right? And then sometimes it comes right back in tune. We're going to go ahead and find out what's going to happen first. Will we break the regional bank scare first, or will we break this market first, this tech run first? All things to kind of keep in mind. Of course, you guys can find out all that right here on Benzinga. We'll bring you guys over to live trading now. And of course, I got my show later today, Start Swing Trade, 3 p.m. to 4 p.m. If you guys want to check out live swing trading action, I actually open positions right then and there during that show. So if you guys want to check that out, that's 3 p.m. to 4 p.m. every single day. Don't miss that. I'll see you guys a little bit later on, of course, live trading. That's starting up now. Don't go anywhere. And of course, check out TradeZero. I threw up the link for the shorts to watch. We got our own landing page on TradeZero. You guys check it out. Check out TradeZero's flagship software. TradeZero Pro.